Hi, welcome. It's Mary Ellen McGonagle with your weekly Edge show for Friday, September 15th. Today, as usual, we are going to take a look at the broader markets, see where did we close the week, what to be on the lookout for by way of support or resistance, and some of the headline news that drove price action in the markets last week. Last up, viewer question of the week. And this week it's all about high-yielding names that could potentially buffer your portfolio against some of the volatility that has been taking shape in the markets. So here we are with the data points and some of the news from last week. And first up is we did get some very highly watched inflation data by way of the core consumer price and core producer price index, CPI, PPI data for August, and both of them did show that inflation is not going down. It's rising, but not at an alarming rate. So surprisingly, the markets were able to look the other way despite that, as economists are on the lookout, as are investors. Next week's FOMC meeting, and it's anticipated that the Fed will continue to pause their rate hike campaign, at least this time. We did see retail sales numbers for August climb, primarily due to higher gas prices. Another news, we did find out today that the United Auto Workers has launched a strike at both Ford and GM. This is going to impact certainly those companies that supply products and materials to these auto manufacturers. And then we did certainly today on Friday see semiconductor stocks fall very, very sharply after Taiwan Semi announced that they are delaying chip deliveries due to weak demand. So that really drove a particular area of semis down lower. And then, of course, next week, Federal Reserve will announce their interest rate decision on Wednesday. And we're also due to receive a lot by way of the housing market data that could impact that industry group. So let's go ahead and take a look at the markets. Where did we close for the week? And here we are with a daily price chart of the S&P 500. And you can see we've been waffling around here of late, around this 50-day simple moving average. In fact, today was the 27th day in a row that we were within 2% of this key moving average. It's watched as a key area of potential support, but now that we've broken below it, it will be viewed as the first area of possible upside resistance. But bigger picture, zooming out, this 4,600 level is very crucial. If we can get above that level, it would be quite bullish. And then likewise on the downside, we will need to see the markets, if we see further selling, find support at this 4,300, or else it would be quite negative. On the momentum signal side, the RSI has dipped into negative territory. The stochastics are heading south, but they remain positive. So a little bit mixed there, but at the end of the day, caution is warranted. Beyond this, let's go ahead and take a look at the 11 underlying sectors within the S&P 500. You want to be aware of where that strength is relative to weakness and make sure that you're not overweighted in some of those weaker areas. This is a 2-month daily price chart view of those sectors, and then it's sorted by that relative strength. Up here at the forefront, energy, where it has been residing for several weeks now, the industry group was flat for the week, although oil prices are continuing to rise. I'll share a view of that. And overall, the energy sector was up very little. It traded very much in line with the broader markets, but certainly relative to its peers more recently, it's up here at the forefront. Utilities, a newer group up here at the front, showing relative outperformance. The group was the top performer, up 3%. Despite that rally, we are still in a period where this group is attempting to reverse its downtrend. Many of the names in that group remain below key resistance. Financials up here at the forefront. This particular group was up almost 1.5% relative to a flat to somewhat down market, and lots of strength here in a particular group that I will share with you as we progress through today's video, because there are names in there that are providing nice high yields. They could in fact be an ideal way to hedge some of this volatility that we're seeing elsewhere in the broader markets. Consumer discretionary up here at the forefront, but it was all about heavyweight names, Tesla and Amazon, that helped keep that particular area up there at the forefront. And then let's go ahead and turn our attention to some of these weaker areas. And first up, I do want to point out this weakness in technology. This is the XLK, the overall sector, and we can see it has now closed below each of these moving averages. That RSI now in negative territory, trending lower, and likewise with this MACD entering into negative territory as well. At this time, your next area of possible support is going to be this August low, but at the end, we did get some high volume on last week's selling, and I would not be a buyer on this pullback. Instead, as we move through, I'll share with you sub-industry groupings that can be a guide as it relates to the strength or weakness in technology. Another area down here in this lower right weak area is industrials, XLI, and the group was down about 0.5%, but again, continued weakness, and this downtrend reversal attempt is trading at lower levels. They've had a lot by way of the transportation-related stocks that have been suffering. So we're going to keep an eye on that area because we did experience this nice June into August rally. And I do have a watch list of names on the lookout for a resumption of that potential downtrend reversal. So as we move through, let's take a look at some other ways that you can stay on top of these broader markets. And these are ETFs that really exemplify sub-industry groupings in the market, and also, as stated, very helpful in helping identify what's shaping these markets. So here we are with Brent crude oil prices up $94 per barrel. Very strong, lots of strength in this price of oil due to really supply issues that are shaping up. However, as noted, the overall group was mostly flat last week with a couple of bright spots. Here we are with the yield on that 10-year Treasury. We closed at 4.3%, so we're still elevated above that general line in the sand at 4%. Ideally, if we can get those yields lower, we could get some of that strength back in technology and other high-growth areas. As we move forward, I also want to share with you some sub-industry groupings within technology that you will want to keep your eye on. First up here is the software ETF IGV, and you can see that we close the week at this 352 level. So we're right at that 50-day simple moving average. However, the RSI has dipped into negative territory, and we've had that MACD crossover. You will want to see a resumption of that uptrend by way of getting the momentum to shift positive with that RSI and MACD, and see if we can get further above that key 50-day simple moving average. Another big area among technology, semiconductor stocks, and they sold off quite a bit last week, and most of it did take place today, down about 3% on Friday. That really pushed the group lower. And again, all about that announcement from major heavyweight Taiwan Semiconductor. Here we are with negative RSI, negative MACD. Would not be a buyer on this pullback. I will need to see this group get back above these moving averages and get those momentum indicators into positive territory. So from here, I do want to share with you an area of the markets that have been performing quite well, share with you why and what we can be on the lookout for. So we can begin again by taking a look at XLF, that financial ETF. And then from here, I did want to share with you a view of some of these life insurance stocks that are really holding in well. And I will share with you why. So these are in that financial sector. This first up here is MetLife, MET. These insurance companies have a couple of factors that are really helping propel them to trade higher. First up, MetLife has a 3.2% yield, making it attractive from that point of view. But also, these companies have gotten quite a bit better at their risk assessment when selling insurance, and that has helped their bottom line. And then also, if you look at individual companies such as MetLife, they do invest their capital in bonds so that when interest rates are rising and they put new money to work, they are getting paid more. On this chart, we can see that MetLife has experienced a nice base breakout last week. We did get nice high volume on that base breakout, and the momentum here with that RSI shifting into upward territory, likewise with this black line up through the red in the MACD. So this particular name looking quite constructive. Another well-known name in the insurance space is also diversified in that they also have asset management and other divisions, and this is Prudential Financial. They have a 5% yield, and let's go ahead and take a look at this base breakout. And you'll also note that the momentum is very much in positive territory. However, it is currently overbought with that RSI close to posting above this 70 level. We can see that it can remain overbought for some time, but I would be on the lookout for a pullback. I'll go ahead and share with you where to on that pullback, but we can see that MACD is generally trending upward as well in bullish price action. I'm going to add a 5-day simple moving average. That's going to be this blue line when the stock gets going. Pullbacks to that 5-day simple moving average can be an ideal buy point, and currently that 5-day is residing at 97.3, so we're not far, but you certainly, as with any name, don't want to chase the stock. Another name that we can look at in that life insurance space is Aflac, AFL. They also offer insurance elsewhere, but again, these insurance names are faring better. This stock is forming the right side of a base on its way potentially to a $78 base breakout. A couple of other items I wanted to point out with this particular name, and that is that it posted a double bottom formation where it pulled back to this mid-August low, had a secondary rally, and another pullback. So we can see a higher low was posted. And then also we have this MACD crossover taking place. And oftentimes that signals that a new uptrend is now confirmed. And we have positive RSI as well. Not sure if I mentioned it, but this stock does present a 2.2% yield. That's it for this week. Everyone have a fantastic weekend. I'll look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.